The S&P 500 continued to push into a new high territory last week with continued more declining stock than advancing stocks. So are we in a day of reckoning soon for this thing to correct? Because if we look at it, the S&P 500 got this new high with the help of Apple on Tuesday and a little bit on Wednesday. Then on Wednesday, on Thursday, we actually got Tesla to help push the S&P 500 and also the Nasdaq 100 to a new all-time high. Then on Friday, we have Netflix, pushing the index up or holding it up. So with these narrowing of 1C, 2C type of stock, mega cap stock, pushing the index up, that is not a good sign or a sign of a strong market. Looking at all the indexes, you see all of them except the S&P 500 and the Nasdaq 100 making all-time closing high. All the other one, like the industrial, is off of its high. The New York Stock Exchange Composite is also off of its high. In transportation, likewise for the small cap, the Russell 2000. And if we look at the sentiment here. Still, the market participants are relatively complacent. But we notice that the put call ratio is about 0.75 now. So there is actually a little bit more of a put buying at the present. So they are definitely hedging their position here, although they are complacent here, showing by the VIX. Now take a look at the daily advanced decline. Other than on Wednesday where we got that CPI boost, mostly it has been down for the entire week other than on Wednesday. So you can see that there has been market sell-off internally while the S&P 500 is pushing up in a new high territory. And look at the New York Stock Exchange new 52-week low is actually coming up while the S&P 500 is moving up and closing the new closing high on Thursday. So this is not a good sign. We are getting more 52-week low than 52-week high. And for the NASDAQ, we are also noticing the same thing here other than on Wednesday, that CPI boost. And notice that, look at this. The Nasdaq 100 been up 5 consecutive days. And a more telling sign is the new 52-week low here. You see this new 52-week low is actually coming up. And it's over 210 stock make new 52-week low on Friday, while the Nasdaq 100 closed with an all-time high and also made a new all-time high on Friday. And here looking at the Nasdaq cumulative AD line, you see how steep it is declining while the Nasdaq 100 is pushing it up. And that is all due to the mega cap stock. Looking at Apple pushing up the Nasdaq on Tuesday after the WWDC, and basically they kick in the stock buyback. And also on Wednesday we got a little lift from it, a little bit of follow through, but it faded after it pushed up to over $220. Tesla on Thursday came in and helped hold the market up, while Apple and all the other FANG stock is kind of retreated a little bit. Then on Friday, we saw Netflix come into play, and Netflix was the big winner on Friday with over almost 2.5% gain or plus 16 points, and that helped hold the Nasdaq and the S&P up at the new high territory. Look at the market profile chart for the ES. We notice that it is doing a one-time framing down after it broke out this multi-day balance and gap up here. So right now we're basically looking to see what is a form of balance up here to see would it get back up to the new all-time high. But if it break below this poor low, there is a poor low down here. And if it break this poor low, I wouldn't be surprised to see it come back in to this 5380 under 5400. So basically come back down to this 5380. Now we are doing a little bit of a contract roll next week. We're going to start trading the S&P 500 September contract. So the chart going to get a little bit messy. Wait for a couple of days for it to settle down, because the adjustment, that kind of stuff kind of throw a lot of the level off. And so you can see on this volume profile chart for the ES, you see that it come up here and try to balance here now after it broke out of this multi-day balance. So we'll see when it comes down and fill this gap, or will it push up to a new all-time high. And looking at this daily chart for the ES, we see that the market is pricing in for the coming week, the upper end. The upper range is between 55.60 and 55.52.50. Also on the lower range is pricing in 54.48 and 54.2250. So for the coming week, we're going to see what it pull back to the lower range and possibly come down and fill this gap here, and then work itself back into this balance area down here near the 53.50 area. Now, if it continue to push up, then we'd be looking for this 55.50 area and 55.60 area to get tagged, and that will push up to another new all-time high for the ES. And looking at the SPY here, the ETF for the S&P 500, the market is pricing in the upper range between 548.40 and 547.80. And the lower range is quite wide on the spread here, is 537.20 and 532. So we're basically looking for the SPY to see what it pull back in, fill this gap here, and come down to this 531.56 area and see would it be able to hold and get a bounce back up. Now, for the continuation on the upside, then we'd be looking to take out the all-time high and come up to this 548 area here, the upper range of the weekly expected move. And just a quick follow-up on gold here. You see gold is basically holding this area here, this high volume zone here between the 2360 and 2340 area. Now, what I'd be looking for the coming week, if it could come up and get above this high volume zone, then I'll be looking for the possibility for gold to push back up into the 2400 area. But if it come back below this high volume zone, then I'll look for a continued retracement down to this level that I've been waiting to see it come down and tag. That would be somewhere around this 2290 area. Then will be probably be a better, swing long type of location to look for a trade. But right now, it's basically sitting right at this high volume zone. So we'll see how the dollar is going to do in the coming week, because the dollar has been holding firm in the last few days after the latest CPI and the FOMC announcement. So as we keep watching this negative divergence between the accumulated AD line and the NASDAQ 100 and also the S&P 500, definitely right now the market is a little bit distorted by these mega cap. And right now the new game is they pick one or two of those mega cap stock and use that to push the index up because of the skew and the distortion in the weighting of these stock in these indexes, the S&P 500 and the NASDAQ 100. So be careful. It might look like the market is going up. A lot of people is calling this a bull market, but in reality, if you look underneath the surface, looking at these new 52-week low creeping up, and also looking at the advanced decline, even the daily advanced decline, there are more stock declining in price on the update. So that is not a sign of strength. That is sign of distribution, hidden distribution. So be careful. Don't get sucked in on this freight rally here just by a couple of these mega cap. So if you like this video, make sure to give it a thumbs up and help promote this video. If you're new to this channel, click the subscribe to support this channel. And be sure to check out my newsletter at Substack. The link is smtraderca.substack.com. Thank you for watching and good luck on your trading.